If you're only watching Apple for the headlines, you're missing the real story. Welcome back to Insightful Value, where we go beyond the buzz to break down the facts on the market's most talked about and overlooked stocks. This video is for informational and educational purposes only, not financial advice. And today, we're talking about something that might surprise you. Apple's stock is sitting at a relatively low level compared to its historical momentum. Could this be an opportunity hiding in plain sight? Apple, yes, the $2.7 trillion tech titan known for the iPhone, iPad, Mac, and a growing portfolio of services, isn't typically considered a value play. But let's take a step back and look at it from a different angle. Apple's current valuation metrics have cooled off from previous highs, with a forward PE ratio that's starting to look more modest and a yield that's slightly more attractive than usual. There's a case to be made for taking a second look at this giant. So what's going on with Apple? First, the company continues to generate massive revenues, $90.8 billion in Q2 2024, with earnings per share coming in above expectations at 1.53. Still, hardware sales, especially iPhone and Mac, have faced slight slowdowns, mostly due to macroeconomic headwinds and weaker demand in China. But services revenue, Apple Music, iCloud, App Store, AppleCare, is growing steadily and now makes up over 25% of total revenue. That's the recurring income Wall Street loves. More importantly, Apple is investing heavily in AI. During the latest earnings call, CEO Tim Cook teased exciting updates coming soon that will integrate artificial intelligence across the Apple ecosystem. This could be a major driver for future product cycles and revenue expansion. Meanwhile, Apple continues to reward shareholders through massive buybacks, over $27 billion in the last quarter alone, and consistent dividend increases. From a value perspective, this is where things get interesting. Apple's balance sheet is rock solid, with nearly $60 billion in cash and strong free cash flow generation. While it may not be trading at deep discount levels, its current price reflects a more cautious market sentiment, which could be exactly when smart investors should pay attention. Apple isn't a high-growth play anymore, but it's a reliable compounder, and when great businesses trade sideways, that's often when long-term value emerges. At Insightful Value, our focus is on identifying moments like these, when the market's short-term noise creates long-term potential. We break down the numbers, cut through the complexity, and highlight where the real value might be hiding. Whether you're new to investing or you've been tracking stocks for years, Insightful Value is built to keep things simple, actionable, and focused on what matters. For more deep dives into Apple and other compelling companies, head over to insightfulvalue.com. Don't forget to subscribe to our channel so you never miss out on our latest insights. And if you're serious about smarter investing, insightfulvalue.com is where it all starts.